Hey there, everyone. Nick here. This is Chip Stock Investor. I take it you are here because you are interested, as am I, in a company called ASML Holding. I've got my purple shirt on here to talk about ASML, the monopolist in extreme ultraviolet lithography equipment, an absolutely critical, important piece of machinery needed for smartphones, for high performance computing chips of all types. Let's talk about the company's fourth quarter 2022 earnings because they were quite good and they provided a pretty solid outlook for 2023. Before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support as subscribing to the channel helps us continue putting out content like this. Let's start with a real quick high-level breakdown of the numbers. So Q4 revenue was up 29% year over year to just over 6.4 billion euros, or just a skosh over 7 billion US dollars in today's exchange rates. Full year 2022 revenue was up 14% from 2021 to 21.2 billion euros. Pretty darn good considering some of the disruption the company continues to deal with in supply chains, reopening due to the pandemic, lockdowns, also the geopolitical concerns that we all know about, those EUV lithography machines, the most advanced pieces of equipment that ASML manufacturers, currently off limits to China. US and the Netherlands put the kibosh to that. So I would say here overall, really solid finish, conclusion to a bumpy year. Operating profit margin was also 33% in Q4. So a nice continuation for the company in kind of rebuilding its overall profit margins. But we need to talk about guidance. As always, when it comes to stocks, it is what will happen in the future that's more important than what has happened already. So ASML basically just reiterating what every other chip company has already said, including Taiwan Semiconductor Manufacturing. Link to that video here that we did last week on their outlook for 2023. Basically, the industry is in the midst of a current slump driven by consumer electronics that will last through the first half of this year, and then the industry will return to growth the second half of 2023. What does that mean for ASML? In short, not much has really changed from the long-term outlook that was provided just a few months ago. Again, link to the video we did on ASML below after they had their 2022 Investor Day back in November. But here's the highlight. The company reiterated still on track for its longer-term guidance. 2025 revenue expected to be between 30 and 40 billion euros, with gross margin increasing to 54% and 56%. So obviously big revenue growth, but also profit margin growth. And then by 2030, annual revenue increasing to a range of 44 to 60 billion euros, gross margin all the way up to 56%, maybe as high as 60% in that time. If ASML continues to deliver and stays on track to meeting these goals, this is exactly what you want from an investment, not just revenue growth, but also profit margin expansion, which the company, as you know, if you're a shareholder, doles out to you via a dividend and a nice little share repurchase bonus over time too. But of course, ASML would be remiss if it didn't point out some of the risks involved with its business. As we all know, even after severe disruption because of the pandemic and supply chains seizing up, the semiconductor industry is still highly reliant on a globalized network of suppliers and distributors, of technologists, talent. Uh, that is not going away anytime soon, even though there is a lot of effort being poured into reshoring chip manufacturing. So, like the US CHIPS Act, Taiwan Semi building new fabs down in Arizona, Intel talking about new fabs in Ohio and in Europe, Samsung announcing new plants. Basically, a lot of work to kind of get some manufacturing out of Taiwan and put some of that manufacturing on various countries' home turf. They want some more control of supply chains. That being said, ASML still relies on a global supply chain, and it would really like all governments to just cooperate and get along. Sounds nice, but as we know, US and China, trade war, that may or may not go so well. And there could be further disruption for ASML if there's more restrictions placed on exports of chips and high-end equipment, like ASML has had to deal with in recent years. At this juncture, though, demand for high-end smartphone chips, high-end computing and cloud computing, like AI and the chips that support that, demand is not going down anytime soon. So a very, very long runway for ASML as it provides the equipment that is absolutely necessary for these building blocks of technology. Company still on track for its long-term goals. Is it a buy? I'm less enthused about it, obviously, than I was a few months ago when it traded at almost half the price as it is right now. But that being said, after this recent earnings update, stock trades for about 44 times trailing 12-month earnings. It's a premium, yes, but remember that guidance for the first quarter and for the rest of 2023, there's probably going to be moderate growth this year and a big rebound in profit margins as ASML laps what were still some pretty ugly financial reports early in 2022. So even if the stock price kind of holds steady here, if earnings rebound, that valuation will moderate as the year goes on. If you look out over the next decade, if you think the company can deliver on its goals and average a mid to high teens annualized earnings per share increase, this stock has a lot of growth potential still, but it will require keeping focus on that 5 to 10 year outlook. Shares are no longer a steal of a deal like they were just a few months ago. Sorry, folks, but great company, still on progress for massive growth. So don't give up on this one. Stay tuned in. A lot of important stuff happening here at ASML. Full disclosure, I'm still long ASML because of recent growth in recent months. It's actually turned into quite a substantial position for me. I have no intention of trimming that. I don't have any intent on adding to it either at this particular time, but we'll be talking more about this company here in the coming months. So if you haven't subscribed yet, hit that button, hit the subscribe button so you don't miss a video. And it's still earnings season, so we'll have more earnings rodeos coming your way for big tech and semiconductor companies in the coming weeks. Thanks for tuning in. See you all again real soon.